the IRS came out with new regulations for how they wanted crypto gains calculated. They came out with these in 2023. Being a part of the Circa IRS conference as well as the Digital Chamber of Commerce, we responded to those both with the Digital Chamber and individually. And we raised the issue of they were changing the way crypto taxes are calculated. And we say, hey, look, people haven't been using that. They're using the old guidance. You need to provide us a way to transition from the old way to the new way of doing crypto gain calculation. And as a result, in July of this year, they came out with the final regulations as well as a plan called a revenue procedure that does a transitioning of your old way of calculating it to the new way. So let me just lay out what's happening. Most everyone, including all the online do-it-yourself website services like Token Tax, Zen Ledger, Coin Ledger, Crypto Tax Calculator, all these services allow you to calculate using different parameters. And as it turns out, they were using the guidance that the IRS issued in 2019 on their FAQs. Well, the IRS, with their new regulations this year, have reversed themselves. They've changed what their advice is on how to do gain calculation, and it's retroactive. That's very significant. It's retroactive. It means if you use any of the online gain calculation services, I shouldn't say any, I'll break it down for you. There are certain settings that some of the services allowed you to do, which would match what the IRS is doing. Typically, we're not the default settings. We'll get into what those are. But I can say this, that if you use Zen Ledger, Token Tax, Coin Ledger, or TurboTax or TaxBit, they're the same product now, all those gain calculations are incorrect based on this retroactive application of new gain calculation method from the IRS. They're all incorrect. The remaining services are probably incorrect because of the defaults that you selected. But those other services have the ability to cope and change to match the new IRS requirements. So I'm sure all the services will adapt themselves for next year, but you need to take immediate action to protect yourself. This revenue procedure said that if you take certain steps, then they will not apply the gain calculations retroactively. So this is very, very, very big, all right? Because their new calculation methods will generate higher tax, higher penalties, and interest on prior year's audits. You need to go to our website, cryptotaxaudit.com/1099, and we offer a free allocation plan. The IRS requires you to sign up for an allocation plan and formally prove that you signed up and adopted this plan by the end of the year. Merely saving it is not good enough. You actually have to adopt it, and we provide a mechanism for you to adopt it. We basically do a right signature, electronic signature of the form. You get a copy, we save a copy. IRS gets nothing. Very important. IRS gets nothing, but at least you have a time-stamped plan. Secondly, and Ben's going to talk about this in depth, you need to take an inventory of the actual coins and tokens that you own here at the end of the year, like December 31st. By then, you need to inventory all the coins that you have. And we'll explain this more in the next year because I don't want to get too complicated, but we basically set a new baseline for what your existing coins and what their tax basis will be going forward starting January 1st, 2025. So we have a website, cryptotaxaudit.com, 1099. It's going to be on your screen. We have incredible a number of FAQs. We have links to the authoritative documents from the IRS. We have a video that explains everything. But the bottom line, don't think about this too hard, is sign up for an allocation plan today while we're on this call. Secondly, listen to Ben about what it takes to do a documentation and just keep it simple to document your coins you have. So that's basically what's at stake here. Why you need a safe harbor allocation plan is to protect you. I have one client who we did a evaluation on. If we recalculated his gains in 2017 using the IRS's retroactive rules, it would result in approximately $1 million in additional capital gain. Added to that will be penalties for not accurately reporting it, as well as interest. So this could get into hundreds and hundreds of thousands of dollars for that person. So you need to protect yourself. Everyone needs to protect themselves. Even if you don't think you did a lot, it doesn't hurt. There's no downside. for signing up for a safe harbor allocation plan. Ben, can you speak briefly about what's involved in taking an inventory?
Yep, exactly. So, like Clinton said, the two key points before the end of the year are to agree to or adopt an allocation plan, which you can get on our website. And then you have to take this inventory snapshot. Both of these have to be done before the end of the year. So if you're finding this all very confusing, just follow these two steps to make sure that you're in compliance and following the safe harbor, protecting yourself for the prior years. And then in the new year, you can get all your questions answered and we can figure everything out then. So the second point there with the inventory snapshot, this is basically you're trying to look at your portfolio of each wallet or account. So if you go into your Coinbase account, you go to your portfolio view and you want to take a snapshot or an inventory of your assets on December 31st of this year in just a couple of days. So, if you have, one Bitcoin there, you're going to show one Bitcoin. If you have one Ethereum, you'll show one Ethereum. Now, the best practice for this is to just take a screenshot. This way, you're not, scrambling to write things down. A screenshot is, it's kind of like hard evidence. If you're able to try and get a timestamp in there, if you're taking the screenshot on your computer, you can just get the timestamp at the bottom right-hand corner of your computer, of your desktop window. You want to make sure that, if you're taking it in Coinbase or, any of your centralized exchanges, try to have an identifier that that's your Coinbase account or your Kraken account. If you're taking snapshots of your wallets, you're basically, you can go, there's a couple of ways that you can do it. You can log in directly into your wallet, look at your portfolio and take the snapshot there of each asset and how many of each asset you have in that wallet. Or you can go to a blockchain explorer, like Etherscan, for example, there allows you to see the portfolio. Again, you want to get the timestamp in there as well as each asset and the amounts. Important, when you take the snapshot on December 31st, do not make any more transactions until the next day, until January 1st. This is important because if you make transactions after you take the snapshot, your portfolio balances will be off. We or you are going to be using this, total inventory count or snapshot to actually do the allocation in the new year. So once you've reconciled all the transactions through December 31st, 2024, in next year, 2025, we'll take all that calculated cost basis and actually allocate it to your inventory as of December 31st, 2024, using those snapshots. So it's important that no transactions take place after you take the snapshots. Again, this can just be a screenshot, make it simple. And then just make sure, again, no transactions after that, and you'll be good.
Okay, I want to just summarize. Sign up for the allocation plan right now. You go to our website, do it. It's just an e-signature document. It doesn't go to the IRS at any time. Secondly, you want to remember here at the end of the year, celebrate how well you've been investing and do the inventory snapshot as been discussed. I should make it very clear that while your past gain calculations are incorrect, not because of those services I mentioned, but rather because the IRS has changed the rules. They've retroactively changed their guidance. And we need to respond to that by signing up for this allocation plan. Let me tell you a little bit about Crypto Tax Audit and who we are if you haven't heard about us. We are probably the premier crypto tax calculation firm in the US. And the reason I say that is because we don't just do the gain calculation. We don't just prepare tax returns, but we defend people's tax returns in audits. And we are undefeated before the IRS. We have defended audits before the IRS for crypto calculations. And 40% of the time, we get refunds back for our clients who have come to us to do their audits. And the second thing is, some of those cases gone on the tax court, and we are undefeated. And now, it's one thing, to talk to a surgeon who's learned how to do a surgery. It's another talk to somebody who's actually done the surgery. And we've done that. We are the experts in crypto tax. A lot of the online services, the do-it-yourself services, have not actually taken people through the audit into the tax court session. So when we talk to you, we're talking about things that really work. Secondly, we prepare tax returns for crypto investors. It's the only type of tax return we prepare. We prepare using a bulletproof methodology where we add additional things you wish were in there. If you knew in advance you're going to get audited, and it really works. None of our tax returns have been audited. And the third thing that we do is we actually calculate your gains from trading. Now, we do this on a manual approach. We don't just rely on a tool. So if you're used to using a DIY, do-it-yourself tool, you've probably wrestled, banged your head against the screen, trying to figure out how to get the numbers right. Well, we take all that worry off of you. You give us the transaction records, we calculate the results. And we stand behind those results. And the proof is we're winning a tax court with those results. So that's who we are. If you want more information about us, you can go to cryptotaxaudit.com. If you want us to do your gain calculation, tax prep, we can defend you if you do get selected for an audit.